Craig is chief market technician at Piper Sandler, and he joins us now. And Craig, are you here to attest, to vow on national TV that we are not going to start with anything AI related?
We're not going to start with anything AI related, Brian, at all. We're going to talk about the market itself. We're also can talk about crypto. We can talk about these cyclical stocks and building. There's a lot of things happening there, Brian, that are pretty constructive on the charts that I just don't think enough investors are paying attention to.
Okay, I would argue that crypto is a little bit AI adjacent in terms of the need for power, but let's move on. Let's start with the macro market, Craig. It's been a heck of a run. We got Dom talking about meme stocks again. I don't know. How do you and your team read this overall equity market right now?
Brian, if you take a look at the chart of the S&P 500, we've broken out to all-time new highs. It was just a few months ago that a lot of investors were concerned that we were going to see this market break down, maybe down to 2,000, those kind of levels, and all the negativity around the tariffs. And that wasn't the case at all. The technicals got really oversold. We've bounced back. We've seen all sorts of positive signs from gaps and breakouts and moving back above moving averages and golden crosses. It all confirms to us, Brian, that the trend of this market is still higher. We're on target to get to our 6,600 year-end objective, probably sooner than we previously have thought. But again, the trend is still our friend, Brian, and I think a lot of investors are still fighting it. When you look at the AAII numbers right now, we saw 2 weeks in a row of down AAII numbers, yet the market's making a new high. This is a very hated market at this point in time.
I don't know if it's very hated, but so I listened to you and I think that sounds fine. But then I listened to Bill Smead last hour, Craig, and he's talking about how valuations are, basically at all-time highs. And yes, I understand the arguments for why maybe we don't need to worry about that. But then you look at the sparks coming from the meme stocks and, what's going on in crypto, and you think maybe it is a little frothy.
Well, valuations ultimately matter. You got to put all these pieces together. Yes, a technician said that valuations do matter. But when you look at what has been happening over the last 20 years or so, Kelly, this market has been shrinking. You've got 20%, 25% fewer stocks. Big share buybacks have been taking place. I don't know what multiple to put onto this market, right? As you continue to see it shrinking, more money chasing fewer number of stocks. Market's got to go up, just plain basic economics. And I can't fight the historical multiple argument. It's been 16 and a half times post-World War II. I'm not sure that's quite as relevant given how much this market has shrunk.
I love that point, Craig. It's why, by the way, we have you on because you're a pretty smart guy. And, I know you and Kelly are too young to remember, but when I started in this business, there were 8,000 publicly traded stocks in the United States. There are about 3,800 now. Right. So the pool of available equity has gone down while the amount of capital, i.e. money coming in, has gone up. You don't need to be a Wharton-trained economist to figure that one out. Let's go into housing, though, because all this talk about the Fed, they're meeting next week, by the way, lowering rates. We need lower rates. Well, we had some pretty doggone good housing numbers. How do you read some of the housing stocks?
Well, if you look at Horton that had some results yesterday, they were certainly better than expected. Certainly the bar was very low coming into that earnings print. But you look at that chart, then you start looking at charts like Lennar and several of the other home builders. They all look very, very similar. Some of these cyclical stocks that have been way out of favor are starting to act a lot better. And then you start looking at some of the building stocks like BLD, BLDR, some of these kind of stocks. Again, they're showing very similar patterns. They're reversing multi-month, multi-quarter downtrends. As a technician, Brian, I can't ignore that. That's telling me that things are probably better and stronger within the consumer land than what people are thinking at this point in time. And then, Brian, you've looked at charts. You've looked at a lot of these commodities. Copper's breaking out to an all-time new high. Dr. Copper's sending us a signal. The economy's probably okay. And we're starting to see a meaningful pickup in the industrials. That's what copper's telling us. And put this all together, it's probably a stronger environment than I think a lot of people are giving it credit for. And by the way, we're making new highs. That's bullish, and that's the only way to change negative sentiment is through new highs.